Should your malpractice policy be occurrence-based or claims-based? And what the heck is the difference? Let's dive right in. First, I'm not an insurance agent, but I get this question all the time. So I do know this much. And if you are an insurance agent and I mess up, let me know in the comments and we'll make sure to correct it. But this is pretty simple and it's pretty easy to understand once you kind of understand the difference between claims made and occurrence basis policies. So let's dive right in. We're going to talk about the difference between occurrence basis and claims made, what that means for each policy, key provisions in claims made policy that are not in most occurrence policies, and how to choose between either of them when it's apples to oranges, and then the key takeaways from this video. So let's dive right in. Most liability insurance policies are structured to respond to claims in one of two ways, occurrence basis or a claims made basis. The key difference is the timing mechanism that the policy uses for activating coverage. That is, what needs to occur when in order for a claim to be considered covered under that plan. So as a potential purchaser of insurance, you need to be aware that the mechanism for activating coverage behind an occurrence-based policy and a claims-made policy is different. So let's dive in. And if you get any value out of this, make sure you subscribe on YouTube. It really helps us out. Okay, occurrence basis versus claims-made basis. What does that mean? Policies are written on occurrence or claims made. As we've said, written on refers to the policy language and the rules. The basis of the policy determines which claims are covered and which are not. So it's about timing. That's all it is. In shorthand, occurrence policy covers claims arising from acts or incidents that occurred during the policy period, regardless of when the claim was made. So let's say you had an insurance policy from January 1, 2024 to December 31, 2024, and then you didn't renew it. That was a one-year contract. You just had that policy. And then 2 years later, one of your patients or one of your clients or somebody that would have been covered under this policy makes a claim 2 years later. If it's occurrence based and the thing that caused the injury or financial damages happened during the coverage period 2024, then an occurrence policy will cover that claim even though it was made beyond the end of the policy. With an occurrence policy, you do have coverage for the loss as long as the act or incident occurred during the policy period, regardless of when the claim is brought or made by the injured party. So for occurrence policies, you typically do not need tail coverage or coverage beyond the time frame of the end date or expiration date of the policy. Let's contrast that with claims made, in which tail is usually required. That's one of the next questions. So a claims made policy covers claims made during the policy period. That is, the event that gave rise to the claim could have happened at any time, as long as the claim or the written demand from the aggrieved party was made during the policy period and reported to the insurance company during that period or as required by your policy documents. So understanding which one you have is important. And when you're shopping around, let's figure out what the different policies say. So key provisions in a claims made policy, they both have important rights and obligations. So I recommend you read them thoroughly. Insurance contracts are notoriously difficult to read. They have cross-references everywhere and many, many exclusions. So read them as carefully as you can. But let's talk about retroactive date warranties and claims reporting requirements. So retroactive date. If your claims made policy has a retroactive date, that means you have a cutoff date after which acts are covered. Any acts that occurred before the retroactive date will not be covered. Check the retroactive date on your declarations page at policy renewal and when you're getting brand new coverage as well. So what does that mean in plain English? Retroactive date. So I want to start a policy on February 1st, 2024, and I want a claims made policy. So this claims made policy might absorb a claim made for an act that you did a year ago, 2 years ago, right? So we don't always discover injuries right away, or complications can arise from an incident that don't materialize right away. So a claim could come on a delay. So when you're buying claims made policy, you might be asked do you want to have a retroactive date? So if your policy effective date was February 1, 2024, you may want to say, yes, I would like a retroactive date to July 1st, 2023. And so you'll be paying for coverage that happened way back then. Some insurance companies do provide full prior acts coverage. It means there's no retroactive date and coverage is available for all past acts for as long as the policy is active. So retroactive date and full prior acts coverage or prior acts coverage kind of go hand in hand. Retroactive date provides a cutoff date, whereas full prior acts coverage does not. When you're applying for insurance, you may have to put in warranties, such as no person or entity proposed for coverage is aware of any act, error, or omission which might result in a claim. And you have to say yes or no. The best policy here is to just say, to tell the truth. If you think that there might be a claim coming, you probably want to let them know. You'll probably get declined, but that is something to be absolutely transparent on, because usually these come with, a warranty means you're telling the truth. And there may be penalties if you hid information from your insurance company. It can go all the way to denying the claim or rescinding your insurance policy altogether. Claims reporting requirements, especially important for claims made policies. There are going to be strict reporting requirements inside your policy. And so you should follow those to the letter of the law. And keep in mind, you need to report them quickly. And usually it'll say as soon as practicable, which means as soon as reasonable, but very, very quickly. Or they may have like a 60-day cutoff date from the time you're made aware of the claim, something along those lines. So read the policy and the timing of claims reporting from you to your insurance company very, very closely. And then tail exposure, or extended reporting period, as sometimes it's called in the industry. So it's something to keep in mind when you're buying claims made policies. This doesn't mean you have to purchase one policy forever, but you may want this extended reporting period that will cover you for tail for a set amount of time. It goes usually from 1 or 6 years beyond the expiration of the policy. So it's not the same as renewing your policy from year to year. It's when you've either left that practice or left that hospital. Then it'll be for claims that are made for acts that occurred during the policy period, but before the end of the extended reporting period or tail period. So let's give a pretty good example. So you have your practice and you accidentally hurt somebody during your policy period. If it's occurrence-based, you can cancel your policy the next day. And if that person brings a claim 3 years from now, you're still covered, right? For claims made, you must have a policy or extended reporting period in place when that patient brings the claim, whether it's tomorrow, whether it's 6 months from now, whether it's 2 years from now. You need to have either tail coverage or an existing policy renewal in place for claims made. So, excellent. Makes sense. Occurrence is much better in most of these situations. You don't have to worry about tail, and it covers you for any act during the time when the policy was active. However, not every insurance writer or underwriter will offer you a choice, but all else being equal, occurrence-based is better. So if there's a price difference, you have to take that into consideration. If your insurance agent is advising you to go one way or the other, maybe follow their advice or get a second opinion as well there. But all else being equal, occurrence-based policies are preferable so that you don't have to worry about tail and renewing and all that sort of stuff. So key takeaways. As an insurance purchaser, you need to be aware of what type of policy you have or that you're shopping for. Occurrence policies cover acts or incidents that happen during the policy period, regardless of when the claim comes. Claims made policies cover only claims made during the policy period. Know your rights and responsibilities as an insured person, as a professional. Read your policy documents. Although they're confusing, you can do it. You're all smart people. And make sure that you have the right coverage at the right time to protect yourself and your practice if you decide to use malpractice coverage. For more on insurance, you can always follow us at Functional Lawyer, where we have more legal issues as well. But if you love this video and you're sticking here to the end, hit subscribe, and we'll see you guys next time.